Okay, good morning everyone. We're going to get right into the stock market technical analysis. I wanted to get this video out relatively early just to kind of point out some of the things that are happening today. And so as I go along, guys, drop me a thumbs up if you find value in the content. I typically get about 200 to 300 of those, and I'd like to get it like 500 on this video. So let's try to hit over that. All right, so first thing we're noticing, a lot of volatility in this market, okay? And this is to be expected. We're in a corrective phase. The S&P 500 just hit a correction. The NASDAQ just hit a bear market level, and that's defined by down 10% and down by 20%, okay? That's the official definition of what those mean. So it makes sense that we're seeing a lot of volatility, a lot of gap ups, gap downs, intraday moves. All right, that's just par for the course when you're in corrective territory. So again, if the moves are too big for you, if you come and wake up in the morning and you notice that the losses or the gains, if you're getting extremely euphoric on the gains or the losses are extremely hard to handle emotionally, where you just have to get out of your position, then you're likely too heavy. All right, your position's too large. So what you want to do is you want to sell down to the level that you can sleep at night. That's kind of an old Wall Street saying. And so just want to put that out there, that if you're not able to handle the swings, taper back your position size a little bit, and you'll notice that you'll be able to handle those swings emotionally a lot better, and you'll be able to actually stick with the trade as long as the technicals don't change. Okay, starting off with the charts, we're looking at Triple Q's tech sector. All right, so we'll just start off with the weekly chart, bigger picture. Again, they're trying to hold this trend line here. Let me roll that out. And there's your bull market trend line in Triple Q's on tech. That's your channel. And we're at the top of the channel since 2021. And you can see recently we're coming down to the bottom of the channel. Now, this week we were below the channel right here marked in red. Let me go ahead and get rid of this blue lines here. But this week here we were below the top of the channel. They ran in and the buyers ran in and tried to save it. So far this week, and the week's young, but we were below the channel again, the top of this trend line support. We were below it, and they're stepping in today and buying it. Okay, let's narrow it down to the daily time frame. Again, on the daily, a couple things to notice. We obviously still have that bullish divergence that was put in place. This low right here was a divergent low, so we definitely don't want to disregard that. That is still a divergence that we need to pay attention to. And so I'll mark it down out here on the trend line if I can grab my tool. Okay, right there. So we made a new lower low in price while higher low in momentum has not been taken out yet. So that, we definitely want to pay attention to that. Today, they're above this red trend line, which is that larger weekly price channel that I just pointed out. And we have a downtrend to watch. We've got 3 reactions on this downtrend. So you can see 1, 2, 3. So that downtrend is still intact. So at this point in time, what I would say is if we rally into the trend line, which is possible, then that's resistance, and that's the area where it's objective to short. Okay, with obviously a stop slightly above. And until I see any technical change in that posture, I'm looking for more downside. I'm looking for a continuation of the downtrend that we're already in. Okay, SPY on the weekly chart. Obviously some buying as we gapped up this morning, but bigger picture, below the major trend line here, starting back in 2009. Okay, so that's marked in red there. And, we're on a sell signal below it, just some buyers stepping in. I don't see any technical change on the weekly chart telling me that we're not going to continue to go lower. So I believe lower is in the charts as of right now. Let's flip over to the daily. Now on the daily, we have a potential downtrend line. You could probably say we have enough reactions. Let me kind of get rid of these markers that I have. We don't need this flag anymore. But on this one, you've got a reaction here. There's your reaction high. We've got a couple reactions there. So there's a, basically a rally into that trend line, and you got the 200-day moving average right overhead as well. So it looks like that's resistance area right there. That's if we were going to get up there. I don't know if we will. It's hard for me to tell that. But if we do, that would be the objective area to short, because we're still in a downtrend with a stop somewhere above. I would say that they're likely not going to break the 200 moving average, but if they are able to break that and recover, then you could maybe stop out slightly above there. And then we'll just watch this thing and see what it wants to do. There's a lot of resistance overhead, so I wouldn't want to go long on a breakout above there with all the resistance overhead. I would be more interested in going long if we can get one more leg down in the markets and we hit some of these other support areas. That's the area that I'm more interested in going long, not right here on a break above. So I'm thinking if they can rally it up to that resistance, it will get rejected right there. Small caps, bigger picture on the weekly chart. Big sideways topping pattern, all right? This is over a year. And big negative divergence on the weekly chart that remains intact. Sell signal on your weekly, and we've just been kind of flagging out. So as I drop down to the daily time frame here, you can see we have this one we have kind of a potential downtrend to watch. We've got a reaction high right up here. We've got one right there. So if they want to rally it into that resistance, then that would be the area probably going to fall right about that 205 area if they're going to rally it up there. That's the next objective area to short, and lots of resistance overhead on that one. So if it rallies into that, I really like that. It's probably best of show or best in class in terms of a short, because you also have this 209 major resistance, which is the big level of support for over a year. So if you hit that trend line just overhead as major resistance, so they could run up and pop it, but ultimately we should get rejected. All right, if they can recover this 209 area, I'd probably stop out of that short. All right, so again, wanting to take the short on this downtrend line with a stop over the 209 area. That's kind of the trade setup. And if it works out and you do get the rally up to there, I would be looking for another leg down all the way down to 170. All right, good risk reward ratio if you can get that positioning. If you're already short and you've got a position, I don't see any reason to take that trade off. In my opinion, I think nothing's technically changed. We're just thrashing around. It's very volatile. You can see, that's all that's really that's going on. Okay, gold. So I've talked about gold being a buy the dip, kind of a buy the dip play. And I see that in play as well across the miners. So I'm looking to buy dips in gold and the miners as we dip to support levels. And I see today they're selling down gold. It makes sense. Gold basically went parabolic over the last 3 days. This is gold bullion. We've gone from 1934 straight to 2071 in just 3 days. So that's a big move in gold in just a short period of time. So you're going to get pullbacks along the way. But again, disregard the headlines that you're hearing about Russia and all that. That's not why gold's breaking out. Okay, gold broke out prior to those headlines showing up, and gold is really breaking out, in my opinion, based on the inflation trade. Okay, that inflation trade has not gone away. That is actually the bigger trade going on. So we've got massive inflation. We've got the Fed, who's got to figure out what they're going to do with that. They're talking about raising interest rates 0.25%. Meanwhile, inflation just continues to run. I don't know about you guys, but when I drive by and look at like the gas, now gas is a little bit the Russia thing, for sure. There's definitely a lot of increased prices in gas due to the Russia trade. But again, oil has been in a bull market since over a year now. And if you look at commodities in general, ag commodities, they've all been in a bull market. Even wheat, wheat went parabolic. I would sell into that. Someone asked me what they would do with wheat. All right, when things go parabolic, I would sell into that. But that doesn't mean that it's not in a longer term bull market. So you could sell into the parabolic move, let it come down, buy it back at a more long term support line. And So I think that will continue, and that's really what I think gold is, why it's continuing to rally. Again, we did break out of this big pattern right here, so it makes sense that we come in for, there's even the potential to come all the way down for a back test. Now that would be a big move, but if it happens, and I don't know if it's going to happen, but if it does, that's probably the most objective area you're going to get to buy. Besides the breakout right here, this would be kind of a second chance. If you haven't gotten long on gold, then this is exactly where you'd want to be getting long. I will be adding to positions down here if we get down there. Until then, I'm not really expecting it to do that. What I'm more looking for is potentially a pullback as see it selling down. I'm looking for a pullback down to this support line right here. This is your upper trend line that gold's been walking up. So we'll watch for that. So a couple areas to add at potentially would be, on the trend line, obviously, there is a level here at about 1960. You can see that's kind of your former support. That was former resistance all through here. All right, so that could be support. We might dip down and hit that trend line intraday or something and then recover. So that's what I would be looking for, is to add right there. And obviously, if you get the big move down, although hard to give up a lot of your profits, it would be the objective area to buy. Maybe one way to play it, if you see the break of this trend line, you could sell out of your gold positions and then buy them back down here. That's a potential. And silver, I'm scanning some of these silver miners and they just look like they're holding relative strength. So sometimes silver reacts after gold does. Now gold obviously went parabolic, and if we look at SLV here, it hasn't quite done that, so we might see more upside in silver while gold takes a breather. Maybe we'll see silver run. And so I'm noticing stocks like this, ASM. ASM, I own a little bit of this, full disclosure, but we have this downtrend line. Big spike here. This was that Reddit traders time frame where they were trying to spike silver. But throw that out as an outlier, and we have a nice clean downtrend to watch. And we have a breakout. There's a breakout, bullish breakout, above the 200-day average, coming down today, hitting the 200 and bouncing. So looks like very good support right in there, and I'm expecting this to continue higher. Now this is a penny stock, kind of a junk stock, so again, on any of these things, I don't own a lot. I usually taper back my position size. So resistance, first resistance, 114.22. We get above that, it's probably, as far as I can tell, likely going to be right about there, which is 144-ish. And then above that is, kind of off to the races it goes. Okay, so those are levels to watch. Another one, this is another kind of penny stock that I do own in silver miner. But again, still looks relatively bullish. This one had a nice clean downtrend line, kind of drifted sideways. So I was watching this secondary trend line right here. And when we got the breakout, that was the confirmation. Shot straight up, above the 200-day moving average, pulling back, holding the 200-day moving average from above. So looks bullish. Again, penny stock. So I don't really, this one I think could head up to this 163 area as the next level of kind of good resistance. And then PAAS, Pan American Silver. All right, so this one, little uptrend line right here. This one you have to kind of see on the hourly. We started to create a slight upward channel. Not a lot of reactions, but a small upper channel. Broke today, hit the 200-day and bounce off of that. If I go to the daily, could come down and retest the breakout point. Now this does have a breakout. If you look at the daily, you've got resistance, resistance. This is our downtrend line that we were watching. We have a confirmed breakout, but we might come in and backtest it. All right, so if you backtest it, that's the objective area to buy the dip on this thing. And we should bounce off of that backtest and head higher, much higher actually. I don't know if we'll do that. Maybe we might just hold the 200-day moving average, but if you see that, something to look for. It would make a lot of sense to break down and hit this backtest, give up the 200-day moving average. It would be very bearish kind of on that initial look, and you might shake out some Johnny-come-lately longs, and then you'll but then that is the most objective area to go long at this point. Okay, oil. This is oil futures. I don't see a short yet, but something to watch. Oil obviously went parabolic. It's getting kind of scary to see that, just to see the prices of everything rising. I've got this trend line little breakdown here, but then we went parabolic. So we could come down to the trend line. A break of the trend line would likely be the sell signal I'm looking for. I just don't see anything to short yet. And I'm not necessarily interested in shorting the actual commodity. I'm more interested in shorting maybe one of these refiners. So DVN, I'll point this one out again. I like it. It's a short setup, but we can't take action on it yet. There's no actionable trade. So DVN, clear uptrend line from October of 2020. Lots of reactions to define that trend line. Kind of some more right in here. Didn't quite get there, but that's the trend line to watch, all right? And if you get a break of that trend line, a nice impulsive breakdown, that's your sell signal. First level of support, 45.09. You got the 200-day moving average below, and then another level of support, 35.63. So those are the levels that I like to watch for bounces off of support. But again, we need that sell signal, and we don't have that. The other thing that we have, obviously, that continues to extend is negative divergence on the RSI and the PPO. So that remains intact. And so that tells me that we're going to break soon. I just don't know when. So what we do is we just let this thing continue to do its thing. When we see the sell signal, we take the short. The more you go up, the farther away these initial support levels will be for a short trade. So it's actually better to let this thing just continue to climb higher, and then when it breaks, you'll have a larger area of profit. So it increases your risk-reward ratio. Financials, all right, so this is a key level to watch, and it's actually an objective short right here and now. So financials on the daily, we've got a key level of resistance at about 37. We did get a sell signal because we broke the last 2 days. So that is, see the break right there? We broke, and then the next day we got confirmation. So 2 days of selling. Today, kickback right into the resistance. That is an objective short right there for a move down. All right. So looking for that to reject down to 35.04 and then down to this 33.63 area. Again, this XLF, when it broke, came with negative divergence. So you'll see that right here. Let me kind of mark that out right there. That was your divergent high, and you'll see that we're continuing to drift lower in momentum, just slightly, but it's definitely there on the RSI. And on the PPO, it was slightly there. Let me just double check. Right there on the PPO, just barely, kind of an equal high on the PPO, but a higher high in price. So it's negative divergence, telling me that we're likely going lower. And then if you want to scroll this out, we do have larger negative divergence that's really been in play for quite a while. Okay, so looking for that to reject at that 37 and head lower. If it doesn't do that, you know where to set the stop. It'd be slightly above. I wouldn't let it go much beyond, about 37.50. On a daily close, above 37.50 is probably where I'd want to stop out at. Okay, here's a short setup. It's not actionable yet, but I do like it as the next potential shorting a sector. This is XLP. XLP has been one of the stronger sectors, more of a defensive sector play. So, I don't know what this says about the potential shorts on triple Qs, because maybe there's going to be money rotation that's going to happen. But, and that would be from some of these defensive stocks into more growth. That's a potential. I don't see it yet, but all I see right now is a potential short setup on this XLP. What we have is a kind of a bearish rising wedge, or you could say it's an upward price channel. But we've got clean trend lines defined. So there's resistance right here. All right. And support down below right there. You can see all the reactions, well-defined support. There's one there, and there's another. Okay, we overshot to the upside on this one, and we have since broken back down into the wedge. So that's a false breakout right there. This breakout came with negative divergence. All right, see the momentum, how we're dropping off? And it is there on the RS or on the PPO. If you look on the hourly chart, it doesn't quite show on the daily, but there is negative divergence on both, meaning that we broke to new highs in price while momentum was dropping off. All right, that tells me that we're likely going to break to the downside. Now we're at support right now on this major wedge, and so we need to see a sell signal. The sell signal would be a breakdown of this trend line, and it will also take out the 200-day moving average. So if that happens, we'll look for levels of support. I like this one right here. Lots of reactions right there at that key level. You can see I've got 1, 2, 3 reactions. So I would say that would be your first target of about 68.75. From where we're at right now, that's a move of about 6%, 5.5%, 6%. So, you know, this isn't going to be a big mover because it is defensive stocks. They don't go up as much, they don't fall as much, but that is a potential target. And I'll kind of dial it in and see if we have any other levels to watch. But for right now, it's right there. Okay, so I don't see a whole lot more going on this morning. So guys, check out my stock market technical analysis course if you're new and you haven't done that. Link in the description below. And drop me a thumbs up. I'll catch you guys on the next.